So, we are back and we're talking all things money, financial awareness, financial literacy. If you watch the previous programs, we're talking about financial planning. What are the fundamentals of financial planning? And one of the things that we emphasized is a financial plan also has to address the risk aspect. So, life is all about risk. We are where we are because of people who took risks, and many people are where they are because of going through certain risks. When you wake up, when you start your day, there is a risk. When you drive your vehicle, there is a risk. When you build your house, there is a risk. Recently, I had the story about people who lost their stock due to fires happening, and I hear many of these stories. But if you lose your entire stock, what's your game plan of actually coming back? You see, these are the questions that we need to normalize having conversations. Painful as they are, let's normalize engaging in those conversations and ask ourselves fundamental questions. So today, I've invited my good friend, Mr. Rufai, to explore risk. What is risk? What are the various types of risk? We're going to be having that conversation today on risk and how can we actually plan for that. Mr. Rufai, thank you so much for coming back. I know you're an extremely busy person, but thank you so much for sparing your time just to sit with us and have this conversation. So let's get into it.
Right. Risk.
Yeah.
Risk is the uncertainty that something will result in a loss or an injury. We face that in life.
Yep.
Sometimes you come across situations where you lose. Now, there's several different types of risks that we face. The first one I would like to talk about is income loss. This probably happens more often in our situation over the last decade in the form of retrenchments.
Yeah.
A lot of companies that have closed down, and all of a sudden, a breadwinner finds himself
jobless. And the bills are still there.
No means to take care of his family.
Yeah.
So it's a very big risk. Sometimes you come across unexpected medical expenses. We are not on medical aid, most of us.
Yeah, majority people are not.
Even if you're on medical aid, there are certain charges that some doctors will require a cash payment rather than
medical aid. Yeah, quite a number of cases.
Yeah, so when you are faced with huge medical bills and you have not planned for it, that's risk. Sometimes we're faced with premature death.
Yeah.
You're traveling on the roads, there's an accident and you're gone.
The breadwinner is gone.
Big risk. Sometimes there is market volatility.
Life happens.
All of a sudden, everything is gone.
Yeah.
But that's life.
Yeah, that's true.
It has to go on, but it's a risk.
Yep, it is.
And we need to make plans to protect ourselves against such kind of risk. Sometimes there is a property damage. All of a sudden, your property is, whether it's hail,
natural
or
disasters,
it's a storm,
floods,
and you are left with nothing.
Yeah.
You want to make sure that you go back to your original state.
Yeah.
And then legal. I'll give you an example. Some guy I know recently driving in one of the high density areas comes across a group of young guys who were drunk.
Wow.
One of them all of a sudden jumps onto the road.
Wow.
He's knocked down. He had injuries, survived for a weekend. Dead.
Wow.
You're faced with legal.
Culpable homicide.
Yes.
You need to hire a lawyer.
You need to hire a lawyer.
You can't defend yourself.
You can't defend yourself.
Yeah.
So all of a sudden that can happen.
Yeah.
And then obviously the most famous one, sometimes you might outlive your savings and investments. especially in retirement. You'd put aside a certain amount of money, but come retirement, maybe 1 year, all the savings are gone. And you've got nothing to take care of you for the remainder of. Those are the risks that we face, among the risks that we face personally as individuals.
Then you talked about these types of risk, but want to also speak about some financial risks in terms of market risk, credit risk, and operational risk. I think that some people are also in this space. They may also need to understand.
Yes, we've got to understand market risk, the changing environment in the markets, and in our market, that is a common thing. Whatever you do, any plans, you need to really scan the market. Look for where it is likely to go. And in some cases, also linked to the politics of the country, depending on where you are. So market risk is a credit consideration, is a very important consideration whenever you're looking at your personal risks.
Very important.
Credit risk, the risk that you have given money to maybe a friend, or you've given money to a business partner, or somebody has borrowed from you huge sums of money, and the likelihood that they might not give you back your money. Operational risk. The risk that, for instance, if you are running a government, a company, or you're running a business, and the operations of the company are forced to stop because of the environment, or you're not able to make money out of the environment because of the changes that are happening. For instance, if you were in the printing business, for instance, your business might get reduced as the technology.
Disruption.
Grip on
people are running away from paper.
So operational risk sets in. Liquidity risk, the risk that you don't have enough money to take care of your liabilities.
And that's serious.
And that's a big problem. If you don't put proper plans to make sure that you take care of yourselves. I'll take an example of a farmer, tobacco farmer. He earns his money from April maybe to August, when the floors are open and the sales is tobacco. But his life continues until the next sales period. If he doesn't plan and set aside some money to take care of expenses during that period, then he will face liquidity risk.
Serious ones.
At some point in time. And if he does that, then he might not be able to produce enough crop to take care of himself and his businesses. Then obviously there's legal risk. The risk that you're forced to hire a lawyer, or you're forced to get access to legal representation.
Someone just sues you because they want to prove a point.
That can happen.
I remember someone who approached me saying, I'm being sued for 20,000. Over some frivolous claim. I'm like, 20,000. But again, you have no option.
You have to get
legal representation. Otherwise, someone will come with a judgment for $20,000. And you're exposed.
So the risks, they vary. They plenty of them. They happen depending on the situation.
So let's look at the difference between personal risks and professional risks. What is the difference in terms of these risks, in terms of financial planning?
Right, professional risk, I think, is one that you probably, I don't know how people would like to look at it, but it's the risk that is associated with the professions. Take, for instance, a doctor. What risks does he face?
Medical negligence.
Yes. How? The other day I was talking to a doctor, a friend doctor, and I'd gone for consultation, and he said, do you have any allergies? And I said, yes, sulfur.
They want to know.
Yes.
Yeah.
And then he said, good. So I'll make sure I recommend you, the right medication.
That's true.
Then he says, yes, allergies, they're a real problem. And I said, what happened? So he says, a lady came here, asked her, do you have any allergies and what? And she didn't say. And we gave her a certain injection.
Wow.
The rest of that day was bad because we were busy trying to resuscitate her. She had terrible allergies.
Wow. Massive reactions.
Yes. So those are the risks. Lawyers and what do they call that money that are kept in there?
Or trust funds. You don't end up with trust funds. Yeah.
Then
but also professional negligence for lawyers, eh?
Yes.
Because you see, some more clients are also becoming aware of their rights. That you can actually sue if a professional is not actually performing very well.
Exactly.
Yeah, so medical doctors, for example, medical practitioners, legal practitioners, even estate agents. Yeah, they're also professionals.
So yeah, those are the risks associated with professions.
Yeah.
And we have to make sure that we plan for this in our specific professions.
Yeah. So I think also it's very important for people to understand the nature of their profession and also the types of risks associated with that profession. Because you see, professions also carry various risks. It becomes very, very important as well for people to be proactive. Then once you look at some of the signs that someone might actually be exposed to significant financial risks in their life, what are the telltale signs?
If it is a company or an individual who does good assessment for themselves, they have got to look at the debt to income ratio. If you are heavily burdened with debts, you are at financial risk. In some cases, if they are involved in certain payments that they make monthly, you start to miss payments.
That's already a sign.
You know that
something wrong.
There's a problem here. And in some cases, you also have overdrafts everywhere.
Borrowed, highly borrowed.
Highly borrowed. And wherever there's an opportunity for you to get some money.
Wow.
Yeah. And sometimes you find them taking risks and getting loans with very high interest rates.
Wow. And that's very real, eh?
Yes.
I once did a case. Someone had taken about 50,000 at an interest rate of 12% per month. So I was trying to think, what exactly are you doing? That gives you $6,000 every month in terms of revenue that you can pay on top of the capital. So by the time that we went to court, the amount was pretty decent.
Huge.
Yeah, around 70,000 or so. Interest rates. Very, very important, eh? Yeah.
It's a reflection that there is a problem in financial risk, financial management.
Exactly. Fiscal discipline as well.
So high interest loans and even credit cards. Credit cards.
This is usually first world.
It's not very popular here.
Yeah.
But in the first world, even in South Africa, not necessarily first world, but even in South Africa, credit cards are a huge means of funding one's lifestyle. So you see that credit cards will be heavily used. They'll be full at every time.
They're stretching their card to the limit.
Yeah. And the most basic indication that somebody is struggling is they fail to pay essential bills.
Can't pay your rentals.
And even utilities at home.
Can't pay your assistants at home.
Cancel rates and things like that.
Yeah, and see what you're saying, it's sometimes the seemingly small things that are actually serious red flags.
Exactly.
So you're defaulting on school fees. Sometimes you used to pay cash. Now you have to do a payment plan, not from a financial wellness perspective, but because you actually don't have the money. So I think it's also important for people to begin to look out for these things, which may appear small. Yeah.
There's one more important element that I want to talk about here.
Yep.
And this is about credit risk. This is a risk credit risk agencies.
Mm.
We used to have a functional such institution in the country,
Yep.
Dun and Bradstreet.
Yeah, back then.
I don't think it's still there.
There is something.
There's FCB,
Yeah,
but it's not.
same level with Dun and Bradstreet.
Yeah. The reason why I'm talking about this is credit is very important for national development.
True.
Why? Because it allows an individual to go and get goods from the shelf.
Yeah.
And getting goods from the shelves allows the manufacturer to engage in additional shift
Yep.
to bring in more goods and fill the shelf
Yeah.
so that they're taking out. Although consumers will eat before paying or they consume before paying, but it has got this effect of allowing the manufacturer to engage more people so they can produce more goods, and that way generate employment. That's why I'm saying it's critical for national development.
True.
In countries like South Africa, for instance, it's huge. And because it's huge, it allows the industries to sustain and to grow in some cases. Because it's always creating a consumption and allowing the manufacturer to produce and so in respect of these credit credit institutions, theirs is more developed. Because at any point in time, every person wants to know their credit rating.
Credit score. What is it looking like?
They even advertise it every now and then. And once you know your credit score, you know you can go and borrow and get more money. It tends to improve the livelihoods of people.
It also encourages discipline in a way.
Yes. In our case, it's a cash market.
No credit.
You need to have the cash.
You won't buy a sofa.
And that limits consumption.
Yeah.
So I think the starting point is we should encourage to develop a system that's able to do credit ratings.
Very important
for our people. Once we do that, then institutions that can provide credit can do so, and therefore expand our consumption. And if we expand our consumption, we expand employment creation.
Very, very important.
And that's critical for our country.
Yeah, and I think you're actually making a fundamental point that debt is not actually bad. It's the type of debt.
It's the type of debt.
Yes. The type of debt.
So we really have to, I don't know, I think maybe calling upon government to make sure that we have these credits available, credit institutions, and create an environment where people can borrow to consume, create demand, and let our industries produce, and then resuscitate them and get them to produce for us. And that way we are able to grow our country, GDP and other things.
True. So you were giving some of the highlights in terms of the signs that someone may actually be exposed to significant financial risks. Just leave another examples before we move on to the next item.
Obviously, there are other issues that can come in when somebody is struggling with risk, especially financial risk. Financial stress. You don't want it when you are 45 to above 45. Because then the likes of BP sets in and a lot of other, diseases follow.
All right, so
there's loss of sleep.
What else you do that?
And normally somebody who's really burdened by financial failure is irritable. Kind of mood swings. Because then collection agencies are on you.
No, they're very aggressive.
Yeah.
You see, majority of the times, this is the line that I'm where unarowa someone's
Hey.
touch unakuita. Utarisa so dio wakatora 50,000 game plan yakakambira sei. Unayo mari adzandina mudara. Yeah, so munhu akangoti zvisinganzwisiki.
Yeah, and from collecting agencies, you've got foreclosures.
Yeah. If it's a mortgage, though.
Coming in.
Yeah. Yeah.
You've got lawsuits and judgments.
And legal fees.
Yes.
Yeah, and sometimes, legal costs will add on to the burden, big time. Yeah, because everyone is there to get their portion.
And the lawyers are more aggressive, so
I agree.
they want to make sure that they are paid.
No, we are aggressive. Yeah, in fact, if you're a lawyer, one of the most exciting types of cases is debt collection, especially if it's secured. Because you're now moving in for the security,
Exactly.
collecting the debt, you can even do summary judgment.
Exactly.
Yeah, so it's very, very interesting. So pretty much, I think we're discussing the impact on financial futures of people. So you're talking about health concerns, and I think that's really fundamental. But now, several researchers have actually demonstrated that there's a link between mental health and financial issues. Many people have been driven into depression because of financial matters. Many people right now, you're talking about being irritable, they can't sleep easily, and these are all real issues, by the way. And just encouraging people to really be responsible in terms of managing their risk. All right, so I want to look at the role of insurance. We've talked about risk and the various tasks, and I like what you're talking about, the distinction between personal risk and professional risk. Because a number of times people say, have numbers. But you realize at a personal level, the risks that are associated, even in business, there are risks that are concerned. Nowadays, you find that many people, I don't know why they're not actually insuring their businesses. Because you see, you can also run into a bad month where you need to pay salaries, but you have no money. Where something happens to that big client who usually pays you, and they're stuck and you can't do anything. So I want to get the role of life insurance. How does life insurance fit into the broader picture of risk management?
Right. Life insurance provides the financial protection.
Very important. Financial protection.
Against the expected loss, for instance, of a breadwinner.
Yeah.
If the breadwinner is gone, there's a payment obviously that comes in.
Yeah.
And that can be able to take care of the family until maybe they are able to stand on their own. So it becomes like a bridging fund for families.
Talking about that, I heard of somebody who died and left a 2-month-old baby in an accident.
Yeah.
So the majority of the people, they don't really think that far. Not saying you want something like that to happen,
but it happens.
It does actually happen. And many times you notice that the people who really feel the impact are the people who are looking up to a particular person. Which is why sometimes, if you're in that position as a breadwinner, I think people need to be proactive in terms of saying, what can I actually do to also ensure that my absence does not have to disrupt life. And I think that's the point that you're talking about in terms of that. Yeah, we can go on.
It is also income replacement for dependents.
Very important.
Yeah, very important. And also ensures outstanding debts in the event of your death are paid.
So you're owing a particular entity. The security comes in now. That's interesting.
Exactly. And then obviously funeral cover reduces the burden to dependents.
Yeah, true.
Whereas they're going to start looking for cash to buy a coffin, and if you've got insurance cover, funeral cover, that's taken care of.
Imagine now with people in the diaspora, you hear someone has died in the UK.
Yeah. Yes.
People want £15,000 to bring back a person who is dead. And that's when you realize, I don't know, I'm not trying to judge people, but your life essentially puts unnecessary pressure on people. When there are already solutions
that you can put together yourself.
Yes.
To make sure that there are no such problems for those who remain.
Yeah, so you find that majority of the times it's the survivors who really feel the pinch. Because someone was just saying, no, next time, I'll do it next time. And that's why I think it's very important to be proactive, yeah.
And then business protection through key person insurance. I've talked in the past
about that example.
How
Yeah,
it takes care of the family, or how it even grows the business and make sure that it continues to run for the family until maybe the children are old enough to come in and take care of.
Which is true.
So yeah, it does give protection to the family. So it protects the family. That's a critical element.
And I like that element where you're talking about predictability. You see, I think we did this in the first conversation. We talked about many of the things people call emergencies. They're actually not emergencies. It's simply a manifestation of lack of planning. You're going to die. It's a fact. The question is only when. You're going to fall sick. The question is when.
When.
You're going to lose a loved one. The question is when. If you're driving, either you're going to bump into someone or someone is going to bump into you. The question is also when. So ultimately, you notice all these things, the question is going to revolve around when. And the moment you do that, I think it's also very good to have a mature conversation with yourself and say, what am I going to do about if that happens? And are you going to be in a far much better position if you had a product, or in a worse off position if you didn't actually have that? Yeah, that's very, very important. Then, how does life insurance help mitigate some of these financial risks?
Right. Life insurance comes in to take care of these losses, for instance.
Yeah.
If we talk of a developed institution or jurisdiction like Europe, and maybe South Africa, Morocco, Egypt, and so on, life insurance plays a key role in almost every decision that financial decision that an individual makes.
Yeah.
And it comes in to mitigate against the risk of loss of an individual or a breadwinner.
Yeah.
The risk of things like taking care of school fees in some cases, taking care of businesses, providing them a hedge against losses of top individuals, covering your retirement, obviously. And those are the products that life insurance companies provide.
Yeah.
And they come in to ameliorate the risks that individuals face. Again, financial risks that individuals face.
Yeah.
And it's important that we then take them into account as and when we do our planning.
That's very important. So let's talk about risk management. We've talked about all these things, but what are some of the steps that someone can take in order to assess their own financial risks?
Okay. There are several steps that one has to take to assess one's own financial risk. One, I think the starting point, like always, is you have to identify your goals. And goals obviously are split into short-term, medium-term, and long-term goals. Obviously building ultimately to retirement. So those are the goals that you have to assess. A thorough investigation of those goals is critical. Secondly, you need to assess your income.
Where's my money coming from?
Evaluate where is the money coming from. And where it should be placed, obviously. Now we have talked of several streams of income. It's critical, because if one stream is not coming in with money, you can use the other one. And so that's important. Where is the money coming from?
Very important.
In assessing your own financial risk. Then you've got to assess your debts and your credits. Which debts need to be paid?
What do you owe?
Who do you owe?
What are the interests involved?
Exactly, that's critical. If you've got a range of these debts, you want to make sure you pay off the high interest debts first.
The one's a headache.
Yes. And yeah, in some cases, those who do financial engineering, they might even borrow someone's financial engineering.
Yeah.
At a lower cost and pay off.
This one in a higher cost.
Yeah.
Yeah.
So you've got to assess that, your
That's
debts
true.
and credit. Then you've got to assess your expenses and savings. How are you spending your money?
Yeah.
And what expenses are you taking care of?
Yeah.
I think expenses can be split into two. There are those that are like fixed. Your utilities, you pay them every month.
They're coming.
You know they're coming.
Whether they like it
They
or
are
not.
$50. They are $50.
Yeah.
So those ones you can't do much about them.
Yeah,
You've
you
got to
can't.
provide for them.
Yeah. Sit over Harare.
There are those which you cannot negotiate, and therefore
Yeah.
you have to make sure they're there. And then there are those which you've got liberty to make decisions upon, whether to pay them or not to pay them.
Yeah.
But you've got to assess that and come up with a clean assessment.
Yeah.
Then you have to evaluate your insurance protection.
Yes.
Life insurance, disability insurance,
And many people don't go that far.
health insurance,
Yeah.
and obviously motor vehicle, which is like compulsory.
Every day.
Yeah. Life insurance is not compulsory. You've got to assess it. You've got to make it a point to assess it. Disability insurance, you need it.
In case life happens.
Yes. And life definitely happens.
And you know, many people, you know someone who was not disabled at one point in time. But when life happens, you hear they lost a particular part of their body.
Yes.
They were involved in this particular accident. Alternatively, they developed a particular medical condition that cost them a part of their body.
And sometimes that disability might make you to be unable to do your normal job. And therefore you lose income.
Yeah, several. You know, I remember one of the cases where some people developed particular conditions, and because of that, they actually had to be retired on health grounds.
Yes.
Yeah, because your job requires a person with a certain profile. Now, your presence in that particular job is already
It's
posing
no
a
longer
threat.
needed.
Yeah. So
Because you
yeah.
can't.
Yeah. And I think what you're saying, it's having those difficult conversations with yourself. Because I think we're also in a society where people always want to avoid the worst case scenario.
Yes.
But I think in as much as want to think about the best case scenario, it's also good to plan with the worst case scenario and plan for it. And I think that is very, very important. Then let's talk about some of the strategies that people can actually put in place in order to manage and reduce financial risk. We've identified quite a number of risks. But what are some of the strategies? And I think what we're trying to encourage now is for people to be proactive.
To plan.
Yeah.
Take care of their risks.
Yeah, true.
Yes, there are quite a number.
Yeah.
There's quite a number of strategies. But normally you want to have it clearly structured. Starting point is you identify your goals.
Again, it goes back to the goals. What do you want?
Exactly. What do you want to achieve?
As an individual.
Yeah. And then obviously in doing those assessments, you've got to evaluate your income. We've talked about income.
Yeah.
We've got to assess the insurance coverage. How much are we covered? Is there a gap? And we also have to assess a number of other things. The current market in which you operate in. You've got to do a review of estate planning and things like that. And then you've got to go to the nitty-gritties.
Yeah.
I don't know whether you do it on a yearly basis or a 2-yearly basis or 5-year basis, but you need to set specific budget goals.
Very important.
In looking at the money that is coming in, how you can improve the money that comes in, things like that.
Yeah.
If you can improve the income streams, the better for you. You've got to look at the nitty-gritties in terms of debt management.
And that's a very topical issue.
What kind of debt do you have?
Like
Or you want to avoid debt completely?
Yeah. So debt that is unproductive, that's what you need to avoid.
Exactly.
Yeah. And it's also good to have better debt. That's going to enable you to be financially free. And that's also going to enable you to improve your financial position. And I think that's very important. Yes.
Then you also have to look at investments. Where do you put your money so that it can sweat for you?
Make you more money.
Yes.
Yeah.
To generate more money for you.
And right now, there's so many people presenting solutions. Have you seen how many people have lost money in pyramid schemes? Because someone told you, no, you get 30%.
Like the recent one, what was it? The Chinese guy.
It's called what? E-creator or something.
Yeah.
There's only one creator, guys. And I heard the guy left with about $4 million he collected from people. So you realize that people have got money, but sometimes they also lack advice in terms of where to place their money.
And our environment is very tricky.
Yeah.
Diversification is an important element one has to consider.
Yeah, true.
Where do you place the money? Is it in property?
Yeah.
Is it in equities or stocks at the stock exchange?
Yeah.
Is it in government bonds?
True.
And is it in cash?
Yep.
Or maybe you put it on the pillow and...
You just want to ensure that is there. Yeah, someone was talking to you about properties. Saying, at the majority of some of the clusters that are actually built, they're being empty. They're actually empty. Why? Because sometimes the rentals are quite excessive, and someone just moves into a month or two. Next time they realize, no, this is not sustainable. Then they left. So you realize that even if you want to venture into property, it's good to also take
you have
your
to
time. Assess. Is this a really good place to put my money? And if I want to say I want to leave, can I actually recover my money? And I think it's very, very important.
Exactly.
For making such decisions. Yeah.
Then you also have to look at insurance and protection. You have to look at retirement planning. Those are strategies that you need to look at, to put in place, so you can be able to and estate planning. So at the end of the day, all these things are so
interconnected. Yeah.
Estate planning, retirement planning, insurance and protection, investment and diversification, debt management, budget and cash flow management.
Yeah.
Those are the issues that you really have to put your heads down to look at and see how you can manage them.
Yeah.
And at the end of the day, you've got to review as well. How often do you review? Maybe yearly, maybe half yearly, depending on what suits
specific needs. Absolutely.
Yes.
And the conversation we're having is, let's have the courage to sit down with ourselves and have honest conversations. And what we want ultimately, and at the end of the day, is for you to take charge of your present. And this is very important. Take charge of your present, but also use the present to make decisions that the future is also going to thank you for. So one day you're going to retire. One day you're going to die. One day life may happen. You may also lose a body part. You may be disabled because of life conditions. But what's your game plan? When you wake up without a job, what's your game plan? With what you already have in terms of your savings, how long can you actually go? Can you go for the next 3-4 months with your current savings? If you can't do 4 months, 6 months with your current savings, what's your plan to ensure that you don't land on a difficult spot? So these are the conversations that we're having, and the idea is, let us engage, let us have honest introspection to help us. And like what we said, we have got amazing giveaways that we want to give you, courtesy of our good friends from Life Offices Association, and we're here just to ensure that you're equipped with the requisite financial literacy skills. And the idea being, after watching these programs, we want you to go and reflect and ask yourself, what are you going to do about all these things? So, Mr. Rufai, we want to talk to someone who is about to start their journey, and this is advice for beginners pretty much. What advice would you give to someone who is starting to think about risk management? in their financial planning? Because, like what you said, we're all at different stages in life. Someone is starting their life, but what advice would you give someone who's starting their journey?
I would say that you've got to begin.
Getting started.
And begin early.
Start early.
Start early.
Very important.
Don't wait until you are 40.
Start
at
now.
age 20, when you get off the ground and you get an employment and you start planning for your future.
Very important.
That's the most important part of your planning stage.
I agree.
And then pick up from there, and you might begin to take some risks at the early stages of your life.
I agree.
And obviously, because the higher the return you get, the higher risks and so on. And then obviously you assess as you go. So I would advise beginners to start early.
Get started.
Get started.
And you know, one of the things that I wish is one day we should be able to take these conversations to high schools, take these conversations to universities, take these conversations to primary school.
Yes.
I think Old Mitch has been doing this for a lot. There are some financial wellness programs that they're doing for free. Very interesting. But what I want to see is more and more conversations around financial literacy happening, where people are told, how old are you? Life goals. What is the future that you're looking at? And what can you do now? Imagine if you start the journey at 18, started the journey at 20, started the journey at 25. I really think quite a number of things will be actually different. So the advice,
the things I've observed myself personally, that universities, for instance, do not really equip people for financial planning. I can tell you that.
They give you a job.
They equip you to get a job.
Yeah.
But thereafter,
you're on your own.
Life, you're on your own.
Yeah.
I've made comparisons, for instance. Somebody leaves university, they're from the same class.
Yeah.
One goes to a bank, the other one goes to a manufacturing company. Look at them 2 years down the road.
They're totally different.
Totally different. I'll tell you the reason.
Yeah.
That one who goes to the bank gets exposed to financial early in his life.
You see realities.
You get to 2 years, that guy has got a flat somewhere in town.
Yeah, investments.
And the guy in a manufacturing company sometimes fails to sustain himself until end of the month. He's used all the money.
Yeah.
And he's got no plan.
No, I've noticed one thing. People in banks, they're likely to get a mortgage. They're likely to own a property. They borrow.
Exactly.
I've noticed, I've got a couple of friends. It says, Arthur, inini bank. They trust it.
Exactly.
Then the next thing, they'll actually show you where the money went. But I think that's the point they're making about being exposed to money and also the principles of money.
It's that exposure that we need when people come out of colleges. They've got that. They can be able to relate and plan for themselves for a successful future with good financial planning.
Beautiful. Beautiful. All right, we have taken a lot and lots of time. We just want to ask a few questions and you stand a chance to win some of the amazing giveaways from our good friends Life Offices. And the purpose of these questions is to also ensure that you've been listening to this entire conversation. So, Mr. Rufai was talking about risk. What is risk? I want you to respond in the comment section. We'll be going through the comments and also identifying some of the answers that we think are actually standing out. So how was risk defined? And what are the types of risks? I want to hear that. What are the types of risks that you as an individual can you actually face? We want to know these types of risks. And also you talked about two types of risks as well, personal risk and professional risk. I want you to give us types of risk that are associated with the profession that we mentioned or any other profession that you know, and some of the suggestions that have been given in terms of how to mitigate this risk. Mr. Rufai, what are your parting words as we conclude today on understanding risk management?
I would like to encourage anyone who's starting out there to Start early.
Very important. Getting
Plan
started.
for your future.
Mm.
Start early.
Very important.
Start saving early.
Yeah.
For your retirement, for your insurance, for your funeral, for everything that you need to plan. That way, you'll be able to meet your financial goal.
Beautiful. The message, start early. They often say greatness is in beginning. We want to invite you to start your journey. So this conversation is actually meant to help you. I hope you are going through each and every of the sessions that we're doing and also getting to ask yourself very important introspective questions into what you are going to do and what you're supposed to do. Because ultimately, I've written a book called No One Is Coming. No one is coming to fix your finances for you. And these programs are meant to equip you with the tools, and that's what Life Offices is facilitating through these wonderful sessions. I want you to share this video with a friend, someone you think can actually benefit from these conversations. Share it on social media, share it on WhatsApp, and let's ensure that people get access to these messages and that they can also make better and wise decisions. Until we meet next time, stay blessed. Don't forget what Mr. Rufai said, start early. Even if you are in your 40s, it's not late. Get started. Whatever level that you are, get started. You will thank yourself one day for having started. See you next time.